Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our SPY and ES systems since 2003, almost 20 years, for individual traders and professional institutions, which I consult with on a weekly basis. All right, so let's go ahead and get started. We got a lot to discuss here. So this is my comprehensive weekend newsletter for December 4th, 2022. Let's go to move that up out of the way. And first off, I hope everyone's had a nice weekend. Apologize, the weekend newsletter analysis is coming out later than normal today. Had a lot of things that we've been working on the website. I sent out a couple of emails already, one of which was regarding our KISS systems, and actually I provide a link to that below the table of contents here. So I'm sure some of you have been looking at that, or if you've viewed the trading community. Some really exciting stuff there, really cool tech that we're bringing here. All right, and if you happen to be new to Breakpoint Trades, these weekend newsletters are very comprehensive. They can take anywhere from 40 minutes to an hour. We cover everything in a very detailed top-down fashion. Breakpoint Trades, again, we're kind of like a nerd site for people who love technical analysis. It's not a dumbed down website that has been simplified to the smallest degree to appeal to the masses. It's for folks who want to learn and who are really into trading and technical analysis. Okay. Anyway, we got 8 table of contents here. Got a lot to discuss. By the way, little headline here: ECB plans to start offloading $5 trillion of bonds to theoretically fight inflation next year. Next, before we get into the market newsletter, I want to show you what I'm thinking first on the general market, a couple of these charts early versus waiting 20 or 30 minutes later till we get to these charts. So here's a daily view of the S&P 500. As you know, this is our proxy, the S&P 500. As you know, we called for a bear market way back in December and early January of last year. We were correct on that well before most people. Market entered a bear market then, formed a series of lower lows and lower highs. Okay, you can see what's been unfolding. Back in October, we had 5 clear waves to the downside. Whenever you have 5 clear waves, again, you don't have to be an Elliott wave master or anything like that, but 5 clear waves, whenever you see something like that, you're going to be due for a pretty decent counter trend rally, and that's what we had. So we had 5 clear waves to the downside at the early October lows. We also had MACD and RSI positive divergence. So that told us we'd have a pretty decent counter trend rally, and we have. Been about almost 2 months now. At the time, I postulated some sort of ABC pattern. We had an initial wave A move up, higher low wave B. That was a buy opportunity. And so far, this wave C pattern. By the way, last week we hit our first major target area for this rally, which was essentially a 1-to-1. This wave C is essentially equal to the wave A here, as you can see. Tagged that area last week perfectly, got a little above the 200-day moving average. We also filled that open gap from early September. All were magnets, okay? We did not close above the downtrend line, okay? So that was our first major target was achieved. Now, under a bullish view, guys, you would label this as wave 1, wave 2, and we'd be in some sort of wave 3 now. Again, anything's possible. I still view this overall as a bear market rally. But as I stated last week, and I'll cover here again today, it really doesn't matter. Down here was a good long opportunity. Our KISS trend systems went long, and they're still long with stops. So if the market magically goes to new highs somehow, the systems will catch it. But if the market goes back into a bear market sometime here, then they will get out and they will catch that too. Okay. Again, for the market to go back to new highs, quite honestly, guys, again, anything's possible, but the only way that occurs is if we see PE ratios of the S&P go back to like 30 or something, which I see is unlikely. But anyway, big resistance here. You can see we have a wedge-like pattern here. So we could possibly break this wedge, or we can still get to these higher levels, okay? You got a 50% fib here at 41.50. This would be my next target if we can clear this downtrend line and hold it, okay? Possibly even up here to 61 fib if things really wanted to go 4,300. We're in early December now. Again, they talk about the Christmas rally or the, this time of year. But December, all December isn't generally positive. A lot of times you'll get some weakness in early December and then your typical strength, a week or so before Christmas, into the end of the year. So anyway, that's the daily. Let's move on. Chart 3, here's a 15-minute view. And guys, this shows you the scenarios that I'm looking for. 3 scenarios. So first off, late last week, we had that big pop on the Fed. Powell speak, huge rally there. We labeled that as a wave 3. We had a pullback, and then we had a bounce on Thursday. Steve and I both said we viewed that as a bear flag, and we'd come down at least as a wave C. Okay, that's what happened right on Friday morning here. That played out perfectly. Then we rallied on Friday. Now, there's a few scenarios. In blue, we would have simply completed an A, B, C, wave 4, and will now break out early this week and go up to a new high in wave 5. Again, what I mean by new high is taking out this 4,100 high back here, okay? Or green is another bullish view where we're forming a more complex pattern here. You could see this coil. So we'd have formed A, B, C. We'll form a lower high D. Another higher low E in the triangle. Remember, triangles are 5 waves, and then we break out. So you can see wave 5 here or here. All right. The bearish view is a nested 1-2 in red. What that means is you have a wave 1, 2, and then you have another wave 1, 2, and we would just go down hard in 3. Under this scenario, we gap down probably on a Monday and just sell off hard. Again, both scenarios here, you could see the one in green and red would have you coming down, but the one in red would have you just crater below this. So we'll see what happens on Monday. Currently tonight, futures are down about 5 points, so no real activity. Next, moving back to the general market. So item number 4 shows our index sector table, what transpired for the week. So you can see on Friday it was kind of a bifurcated day. Again, the market was way down in the morning, like we expected, and then it recovered a lot of those losses, and some of the indexes closed up and some just barely closed down, like the S&P. For the week, all the indexes managed to close higher, with the tech area leading. As far as the major market sectors for the week, most sectors were up except for banks and energy and some financials. Currencies, US dollar had a big sell-off, down 1.2%. That has helped the market, guys. The dollar's had a nice correction over the last month and a half, and that has helped the general market and commodities, and especially precious metals. Cryptocurrencies were up for the week. And as far as commodities, kind of a mixed bag here. Natural gas had a big sell-off, down 14% for the week. Crude oil, though, was up 4.8%. The general index, DBC, was up 1.3%. Copper had a big week, up 6%. It rallied off that support. All the ags, stuff like that, were down. Coffee, corn, etc., sugar. Now, the precious metals were all up nicely. Take a look at these huge gains. Not surprising with that sell-off in the dollar. Now, beware, the dollar is getting oversold here. Could bounce any time. That may put some pressure on those, but they are uptrending. And as far as bonds below, we'll cover that extensively. TLT is 20-year bonds has had a really good rally over the last month and a half off the lows. Next, item number 5 shows the economic news calendar. You can see what's on the docket here this week. PPI, core PPI on the 9th. On Monday, we have ISH services, PMI, factory orders, ISM, that's a big one. Okay. All right, guys, let's go ahead and jump to these index charts. First chart below, item number 6, is a yearly snapshot of the 5 key major indexes. So each candlestick is 1 year here, so you can see. So again, the indexes are quite a bit off their lows right now, especially the Dow. It's only down 5.3% this year. You can see this big tail here. The S&P is down about 14.5%. Remember, it was down high 20% at one point. Triple Qs, though, still lagging, down 26%. IWM small caps down about 14.5%. DBC commodities still leading. Again, they're way off their highs. They were up about 35% at one point this year, but they're still up 21%. And TLT 20-year bonds, again, off the lows, but still down 26% for the year. Should the market hang on or, still have some sort of Christmas rally, I do think the Qs technology area will outperform because it has probably the most, catch up to the other indexes. So if I had to be long the S&P or the Qs, I'd be long the Qs if I think the market's going to go higher. Next, chart number 7, here's a comparison chart showing you the major sectors this year. So in green here, you have XLE Energy. That has led this year. Look at this. Super strong. And again, I was very bullish on energy stocks way back in December and January of last year, as you know. Okay. The second strength here has been commodities. Okay. All right. This one here is VYM. That's large cap value. Probably the best ETF that also pays dividends. It is up for the year, something like 3% for the year now, guys. I really like that play is a play on large cap and dividend, VYM. Okay. Then we have the S&P 500 down here, black. We have the small caps, and of course we have the triple Qs at the very bottom have been forming. Next, chart number 8. Here's a quarterly view of the indexes. Again, I talked about this a few weeks back. This middle Bollinger Band on the quarterly charts was support. You can see huge rally on the Dow here, up about 20% off that middle quarterly Bollinger Band. S&P up nicely. Triple Qs, NASDAQ right off that middle quarterly Bollinger Band, and same for the IWM. Okay. Again, everything got very stretched here. As you know, we had a very strong bull market from the 2009 lows. Then we had that sharp correction in early 2020. That was not a bear market, guys. That was a correction in that ongoing bull market. Then we had basically a doubling of the slope. So the slope doubled here in intensity for what was essentially a textbook blow off in a bull market. And so that's why one reason we were calling for a bear market in December of last year. And even though we've had this strong rally here, we don't think the bear market is overall over. But again, anything can happen. But that's our view for now. But obviously, what you see here is large cap tech area has led. Okay. Why? People are no longer into growth like in the NASDAQ. Those stocks have been punished. So the stocks that are doing best, like energy stocks, older economy stocks that have low PEs, that's what's been doing the best. Next. Chart number 9, here's a weekly view of the indexes. All the indexes here, the NASDAQ, the S&P, they're all in these expanded patterns here. They still haven't broken out of these expanded wedge patterns. The S&P basically testing the downtrend line here. The NASDAQ still not even close. The Dow, though, like I said, has been the epitome of strength. It broke out of this over a month ago and 4 weeks ago. Still hasn't, went back to the highs, but definitely very strong. Next. Chart number 10, here's the monthly view of the indexes. Essentially, the NASDAQ bounced off the 38% fib retracement from the 2009 lows. Next, let's move on to the individual indexes. So chart number 11, here's the Dow Jones. Like I said, the Dow Jones broke its downtrend line So it took out this series of lower highs. Okay. Heck of a rally, even above its 61.8% fib. Again, just like the S&P and everything else, you had 5 clear waves down here. Next, chart 12. Here's the Dow DIA KISS system chart. So you can see how this is done this year. Again, you can see it took a long in March, would essentially been a small losing trade here. It took a long trade in July, got out in August, mid-August, made money on this one. So entered here, exited here at the STS. That's the smart trailing stop. And then again got back in long in October here. And you know, this is obviously a profitable trade. You can see you have 3, 4, 5, 6 higher low stops. The current STS is 329.50. Okay. Next, chart 13. Here's a weekly view of VYM. Like I said, guys, this is my favorite ETF if you want an ETF to hold for dividends, stuff like that, in a bear market especially. This is up about 3% for the year. Pays a nice dividend every quarter. It focuses on low PE stocks, not growth stocks, and it's done extremely well this year. It's done far better than the Dow. Like I said, it is up this year. Next, chart 14. Here's VYM KISS chart. You can see what it's done this year. Similar to the Dow. You can see it went long here in October, and this one has 3, 4, 5, 6, 7 higher low deep stops in place as well. Next, chart 15. Here's the S&P KISS chart. Just like those, you can see what it's done this year. This went long here in late October. So far, we have 3 higher low stops in place. Okay, hopefully we get another STS here shortly. These A's represent amateur buying. You can see how they tend to correlate right with market highs. We call amateur buying because it tends to be low volume, small order size, which tends, basically is the masses, not the smart money. It's the dumb money buying, chasing rallies. And they correspond sometimes with major highs or even little short-term highs like you see here. Again, you can see we're right around the 200-day moving average. We're still holding it. And again, remember my earlier comments, guys, I said, even though we still view this as a bear market rally, it really doesn't matter because let's say it's not a bear market rally. Say the market magically goes to new highs and the S&P PE ratio goes up to 30. Well, the KISS systems will catch it here because we'll have new STS, smart trailing stops, keep you long, and you'll ride the trend regardless of how ridiculous it is. But if the bear reasserts itself, say early next year, the KISS systems will be protected from their smart trailing stops and be out. So it really doesn't matter what happens. The systems went long. I mean, if you had to be long in the market, you should have went long when these went long. Okay. Next, chart 16. Here's the weekly version of the KISS. I actually have 2 versions of this, but anyway, you could see what I'm showing you here is this weekly ATR. That was resistance last time, so it is resistance here now. We'll see if we stop here again or if we actually break above it this time. Next, chart 17. Here's the monthly view of the S&P. Again, slightly down for December so far, 0.2%. Like I said, this shows you the bull market from the March 2009 lows. We identified it as a wave 5 high last year in December. We counted it as a bear market, and that's what we stuck to this year. It's been very profitable. Again, we've had a nice rally here over the last 2 months, but we still think overall that we had a bull market high here, and we don't think this is a new bull market rally at this time. I think overall this will form some sort of lower high and come down. By the way, guys, bear markets tend to unfold in 3 waves, okay? A, B, C, and so far this is essentially one move, like a wave A. Okay, a couple other things to look at, some of these indicators, the 14 stochastic on a monthly chart, the 50% area tends to bounce off of that You can see how we lost that this year. This 50% is now resistance too. So that's another thing to monitor should this stochastic get near this 50% area. Next, chart number 18, here's a weekly view of the S&P showing this expanded wedge. Again, we're nearing the downtrend line here. All right, we'll see if we can break above that or if that yet stalls price like it has all year. Next, chart number 19, here's the daily chart. Again, I already discussed this. We've met our first major price target, which was this 1-to-1 ABC symmetry move up here. We filled this open gap, end of the 200-day moving average. We have the downtrend line here, which is big resistance. If we can clear that, one of the targets would be 41.50, the 50% of fib here. There's also an open gap back here in August, say right up around 42.25-ish. And then you have, if things really get extended, you have this 4,300-ish area near the 61.8 fib. You do have a rising wedge here to monitor. If price were to sell off and break this strongly to the downside, this uptrend line, that should take notice. Next, chart number 20, here's another daily view of the S&P, just showing this wedge pattern. Next, chart number 21, here's a 2-hour view. Again, early last week, we were chopping around. We've been uptrending in this channel. We said as long as price did not fall below this channel, that we were uptrending. We expected higher moves, at least to fill this gap. We could see that gap was filled last week on Thursday. It was a magnet. It was filled on Wednesday. And so that was our target initially. We had essentially an ABC, 3 waves. When you're uptrending, guys, ABCs are bullish. Okay. So again, as long as we're in this channel, we're uptrending. Okay. Remember, there still is an open gap. There's actually way back here in August. You can see it right here. Comes in right around that 42.25 area. Next, chart number 22. Here's a 60-minute view. Again, overall, you can see this area was previous resistance, became support. You could see how we pulled back, bounced off that late last week on Friday. We view that as some sort of wave 4 and likely going up in 5 early this week. Next, chart number 23, this is the 15-minute chart I showed where we had the 3 scenarios. One where we go up right away to a new high, taking out this recent high, 4,100 in wave 5. The other one, complex, where we come down again, form a wave E, but ultimately we still break out. The bearish view would be the nested 1-2-1-2 in red, where we just sell off and we go right down from here. Since the bulls have the football right now, I'm leaning to the blue or the green, but either one of these scenarios are valid. Next, chart number 24, these 4 time frames of the S&P. These are KISS charts. So here's the daily view. Again, the ATR is support on all these time frames now. We still have that, or late last week, we had the buy cycle on the 60-minute, just perfectly aligned with that low last Thursday, Friday. Same on the 130-minute. We still have resistance cycle on this time frame, so we still got to clear that. Next, chart number 25, here's the triple Qs monthly view. Again, as you know, a couple months ago, we bounced near that 61 fib area. Next, chart number 26, there's the weekly view up 2%. Again, still within this pattern. Still a little ways to go to hit to this downtrend line connecting the lower highs. Next, chart number 27, here's the daily view. Again, last week we popped out of this little pennant, bull pennant, chopping around here. And like I said, guys, the Qs have underperformed this year. They're still down 25, 26%. Should the market experience a Christmas rally, hold up here, I think this has the most potential to have a stronger percentage move just to play catch up to the other indexes. So kind of flagging here. This downtrend line would be my next target, and then the 61 fib. Again, that's just from this August highs. Next, chart number 28, here's TQQ. That's the triple or the leveraged ETF for the NASDAQ. I put out last week. It's this bull pennant, which we broke out on Wednesday, as you can see there. Overall, this shows like a symmetry target up around 27. Again, obviously, price needs to stay above this broken flag pattern. I'm long some of this still myself. Next, chart 29. Here's the Triple Q's Renko chart. Nice clean view. You can see how the Renko bounced off this support area. There was an air pocket here, but we didn't need to fill it, which is good. That would have been painful for a lot of people. But we're kind of in the middle between support and resistance. So big resistance on the Renko does not appear until about 325. Next, chart 30, here's a 2-hour view of the Qs. Again, you can see this bullish ABC pattern that occurred over the last week or so. We broke out of that late last week. Next, chart 31, Triple Q's KISS chart. You see what it's done this year. Look how good those A's have been, amateurs. So the Triple Q's, so far we have 3 higher low STS, smart trailing stops. Hopefully we get another 1 or 2 in place here just to get this tightened up a bit. Late last week we had you can see how the 2 moving average ribbons, they were bearishly stacked, they went bullishly stacked, and they were pinching. Whenever they pinch, that was the area that the market was going to rally, it was going to do so. And logical rally. That first pinch or squeeze after they first go positive is usually a good one, and it was last Wednesday. Next, chart 32, here's the 4 cycle time frames. Again, similar look on the S&P. We have the ATR as support on all the time frames. We still have resistance cycle on the 60-minute here, 130-minute. We even got one on the daily, so be aware of that. Next, let's move on and look at a few market sectors. I'm only going to cover a few sectors, guys, tonight, just since I already got a lot of charts. Don't want to need to cut some down. So here's the XLK, the technology area, similar to the Qs. Again, still, they've had a nice rally off their October lows, but still well below the downtrend line. Next, chart 34, here's the transports. They're testing their downtrend line here. They had a little move above it last week, closed right back on it. Next, chart 35, XOU utilities. They've had a really nice sharp rally here. I drew a tight channel to monitor. Next, chart 36, XLF financials. They're diverging here a little bit. You can see a little MACD divergence. They're still holding their 20-day moving average though. Next, chart 37, XLV healthcare. This has been a super strong sector. In fact, I think it's now up for the year. So very strong sector. You could also look at biotech. That's starting to look a little better to me, XBI. Next, chart 38, XLE energy. They've been lagging. Remember, this is lead for the year, but with the market rally, they've now been lagging, and this has sort of an umbrella top here short term. Again, long term, it's in an uptrend, guys, but right now you got a little umbrella top here. Look. Next, chart 39, here's the daily KISS. You can see how the KISS system is done this year. You can see it went long back in early January. Got out once here in April, got back in May. You can see your Demark 13 perfectly marked that high there. Was out of that mess, got back in here, got out here, got back in here, and it's still long with a stop at 86.70. All right, it's done very well. Next, chart 40, here's ERY. That's the triple or double long, double inverse ETF for energy. So should that area break down, this is the way to play it, ERY. All right, guys, that does it for the sectors. Now let's move on and look at some market indicators. Chart 41, here's the VIX. So the VIX has continued to sell off. Early in the week, we did have an initial rally off that lower Bollinger Bands there, but it was a short-lived bounce. It's come right back down again. It's now filled this demand zone. There is some RSI divergence to monitor here, but the VIX is downtrending. It's now at 19. Next, chart 42, here's the VIX, another VIX daily chart. And initially it bounced off this coil, lower trend line, a week ago, and now it's lost it. Okay. Next, Chart number 43, here's the NASDAQ with the 52-week highs minus the 52-week lows. This has been a very powerful indicator. You can see up here all these logical or all these very low risk short opportunities is given you every time this has gotten near zero or even a little above it this year. Late last week on Thursday, it got above zero. That was another good short opportunity for Friday. It is still near zero. Next. Chart number 44, here's a weekly view. I haven't shown a weekly for a while. It's getting up near zero here. So you can see this is caught every time it's gotten near zero. Again, that's the 52-week highs minus the 52-week lows. You have the 52-week highs and lows down here. Up at the top, I'm subtracting the two. Okay, but you can see this year, that's every time it's gotten near zero, that's occurred all at these major lower highs. So we'll see. Something to watch. Next. Chart number 45, here's the NASI summation index. That's been a nice little indicator. Here I have the 2 and 5 exponential moving averages. It's not perfect, but it's given pretty good signals. Gave a nice sell signal back here in August. Give a buy signal there in October. And it's still been on a buy. Remember, guys, if you're watching this on YouTube and you like these charts, if you sign up for Breakpoint Trades membership, we provide the live chart URL so that you can save it on your side and view it anytime you want. You could view an updated view, what this looks like a week from now or 2 weeks from now. That makes Breakpoint Trades unique among the places out there that only give you static images. Next. Chart number 46, here's another version of the NASI. It's the Rinco. Give it a nice buy signal there in October. Nice sell signal back there in August. Next. Here's a couple indicators that still are giving a little bit of warning. Here's the NYAD. Now this is a 10-day average, but whenever you have divergences show up, like here in August, you had a S&P higher high. This made a lower high, and that was a pretty good top. And you do have a divergence here still, so be aware of that. Next. Chart number 48. Here's the XLP S&P ratio. This also has a divergence, guys, so be aware of that as well. Okay, so it's been divergent as price has been going higher. But again, price action is what's important, but keep an eye on these indicators. Next, let's move on to bonds. Chart number 49, high yield corporate. It's been moving up with the market. You can see a little one-to-one symmetry target here so far. Steve added this. Next, chart number 50, TLT 20-year bonds. One heck of a rally, guys. This, guys, by the way, education, this was a textbook breakaway gap, okay? So a breakaway gap is when you have a downtrend line, like a well-defined trend line, and you gap above it on high volume. That is a breakaway gap. That was bullish. This was an area to buy. Bonds were down like 35, 37% down here. This was a good buy opportunity. It's now rallied up to this area, which was previous support, now potentially a resistance area. It may even want to go to its 200-day moving average if it can clear this. You could also monitor this trend line on the RSI. Next, chart number 51, 10-year treasury yield, basically the inverse of TLT. It's come down. Again, you can see this is a potential support. That was resistance up here. So potential support here. If it doesn't hold, then it may want to go to the 200-day moving average. Next, chart number 52, here's the yield curve, the 10-year minus the 2-year, and this thing continues just to fall. Down another 4% last week. Look how low this sucker is now. So again, guys, I know that CNBC and all these publications keep talking about a possible recession coming, maybe a recession's coming. Guys, I don't see how a recession doesn't come. Look at this dang yield curve. Next. Chart number 53, here's a weekly view of TLT. This should have been up with the daily. Apologize, got out of order. This did have a symmetry break here out of the channel. So that gives higher odds that this will form a higher low now in the next pullback. Next. Chart number 54, here's a 10-year treasury yield. Again, this should have been up with the 10-year as well. This is the weekly. Really good pullback over the last couple months here. Just from an educational standpoint, guys, one thing I have on most of my charts is the moving average. You can see how when the moving average ribbons pinch, That's when energy's built up. That's when you get your big moves. When they get too expanded, that's when you're due for some sort of trend reversal like you had here in earlier in the year and just recently from October. Next, chart 55. Here's the big picture view of the 10-year treasury yield going back to the early 1980s. As you know, we broke out of this 35-year downtrend line early this year. The era of low interest rates is over. Did find some resistance around this 4.3% area, but overall, I think this is going to form a higher low, and over time, rates will go higher. So that's a good thing, guys, because little old ladies, who just have money in the bank can now start to get a return on their CDs and bank accounts, stuff like that. And yields will go up on annuities and other things. So I think it's a good thing overall instead of having rates at 0% like they were for so many years. Next, moving on to the US dollar, chart for 56. US dollar weekly view down 1.3%. Again, perfect double bottom back here in 2021. Got very extended up here. We had a perfect symmetry break. This pullback was the largest pullback over a month ago. That told me to look for a lower high, which we got here. We're now at this 50-week moving average. Maybe we'll find some support in there. But symmetry played out. Next, chart 57, here's the daily view. Perfect example of a broken trend line here, back test back in October, sell off. And you can see we're below the 200-day moving average a little bit now. Next, all the other currencies obviously rallied. Here's the euro, FXE. Perfect symmetry break here I pointed out over a month ago, and big rally last week again. Next, chart 59, FXY, that's the Japanese yen. I talked about this as a long opportunity a month ago. Then we had a bullish break in symmetry, and I said that was bullish, and this was up 3.5% last week. So these are two things that you could have played against the dollar, FXY and FXE. Next, chart 60 is the Japanese yen monthly view. As you know, for a long time I was showing this thin zone, and the big target area was the 1998 lows, which essentially we bounced off of. Just perfect. Next, chart 61, here's the daily view of the Japanese yen. You had a tight coil down here. It's now rallied up to its 200-day moving average. Next, chart 62, here's EEM, emerging markets. I've talked about this over the last month or so. I pointed out this bullish break in symmetry here. What I mean by symmetry. So first off, emerging markets started downtrending well before the market. They topped out in early 2021, so about a year early before the general market. So they've been a bear market for over a year and a half. This broke its symmetry back here in November. I pointed that out and I said that was bullish. Well, then they had a nice rally, higher low, and a rally after that. Next, chart 63. Here's the triple long ETF, EDC. That was another way to play this. You can see the bullish volume patterns you had here. Next, symmetry. I talk about symmetry a lot. Most of you understand what it is, but if you're new here, when you break symmetry, this is my write-up on symmetry. So let's say you're downtrending here. You measure your rallies. When you have a rally that's larger than the previous rallies, that's a break in symmetry. That gives you extremely high odds that a higher low will form. That's very powerful because when you see that symmetry break, that tells you to look for buy opportunities. And on the upside, when you get a symmetry breakdown, it tells you to look for an exit. Okay, powerful, very powerful technical analysis tool. Next, chart 65, here's Bitcoin. As you know, this broke down in early November, but it's kind of holding on here. Now, this broken trend line is resistance. So if this were to rally up to here, that's where it may fail. It's got a little bottoming pattern here, so maybe it can push up a little bit. Next, chart 66, there's the weekly view of Bitcoin. I still think it's going to the 10 to 12,000 over time. This was our target from early this year, which we didn't make it there, but we didn't get too far away from it either. Next, chart 67, here's Mara. This is one of the long ideas I put out last week on Monday and Tuesday. This is one of the better stocks in the crypto space, Mara. I pointed out this falling wedge early last week. It broke out, then had a little pullback, higher low, nice rally on Friday up 11.3% on Friday alone. Next, Trevor 68 GBTC. Here's another one. This is Bitcoin Trust. Got to still have this potential little inverse head and shoulder pattern here. Again, if the general market holds up and has another push, I think crypto will as well. Next, Trevor 69. Moving on to commodities. Here's DBC up 1.3% for the week. So far, again, it's been in a consolidation phase over the last 5-6 months, as you can see. It isn't a long-term uptrend, though. Next, Trevor 70, crude oil. Little double top back here, broke down, bounce, pull back on Friday. Next, Trevor 71, copper. Beautiful example. Broke resistance, pulled back, bounced off former that extended trend line, which became support. You also had your moving average ribbon pinch there. You see it? Next, Trevor 72, Joe, the coffee ETN. I pointed out a bullish opportunity in this about a week and a half ago. Had a nice move out of the wedge. Hope you took your profits. It's now starting to come down again. It did not break the longer symmetry. The longer symmetry is in purple here, and you can see we didn't exceed that. Moving average ribbon got very wide down there, so along with the wedge and some MACD divergence, we expected a bounce, and we got it. Next, Trevor 73, natural gas, weekly view, down 14% for the week. Again, still longer term, it's uptrending, but kind of has a bear flag look to it, sort of. Next, Trevor 74, there's another weekly view. Next, Trevor 75, here's the daily view. Closing right on this trend line of a coil. Next, Trevor 76, URA, uranium. Haven't discussed this for a while. To me, this is still in a long-term uptrend, but it's been in now so far about a year consolidation. Working on these ABCs, maybe some sort of big wedge. Next, Trevor 77, TAN. Someone pointed out the solars are standing out a little bit, so this is the ETF. Got a kind of a bull flag look here, so over 84.20 could be a long. Next, let's move on to precious metals. Trevor 78, gold. Nice week, up 3.2%. You can see we had a falling wedge here, which we broke out a month ago. We're now testing this wedge. You could see kind of how if we did pull back here, you could perhaps form an inverse head and shoulder pattern. But otherwise, the stocks are outperforming here. That's the GDX-GLD ratio. That's positive. Next, Trevor 79, here's the daily view. Again, we had this nice triple bottom down here. We broke out of the channel trend line in early November over the 50-day moving average. That was the time, if you didn't buy down in here with a tight stop, you should have bought this break. Pulled back, rallied up, pulled back, higher low, rallied up again to the 200-day moving average. Next, Trevor 80, here's the same chart with the moving average ribbon. Again, remember I talk about, guys, moving average ribbons flip. Always buy that first squeeze. That's your low risk trade. Next, Trevor 81, here's the monthly view. Now, guys, this is very preliminary, but first off, gold had a double top back here in early 2022. All right, now, this is very preliminary, but the very bullish view on gold would be this is a big ABC, and we're going to start rallying up in some sort of wave, 3 or something. But very preliminary, too early to say that. Next, Trevor 82, here's silver, weekly view up 8.5%, so big rally. Silver, a few months ago, found support in this demand zone that we had highlighted previously. Next, Trevor 83, there's the daily. So it's rallied up to this target area so far. This has a nice little rounded bottom, kind of a complex inverse head and shoulder look to it as well. Next, moving to the stocks, the miners, Trevor 84, here's GDX. Again, we pointed out, we thought GDX had bottomed back here in September with this fifth wave, okay? And then it went into a complex, or went into an ABC correction here, and we expected at least a rally of wave 3 or C, and so far we've gotten that. The dotted lines here, guys, and I talk about it here, represent, stops. Okay, a lot of you struggle with stops. If you're swing trading, my method is You initially go long with a stop, you know, close to where you went long, maybe that last low, and raise it to each new higher low. So if you went long back here, your stop would have been here, the September low, then you can move it to the October and then November low, and then that next higher low in November. And you just keep doing that until you're stopped out. Next. Chart 85 here. What does the KISS system look like? Well, the KISS system would have went long back in February, would have got out in April. It avoided all that mess, and then it went long in October there. And you can see all these DVTs or STSs that are in place. 2, 3, 4, 5, 6, 7, 8, 9 higher low DVT or STS, smart trailing stop. I'm still used to saying DVT. Next. Chart 86, here's the GDX GLE ratio. Kind of like looking at that. You can see how, again, I pointed this out back in early November. You had that moving average ribbon had flipped, had the perfect squeeze there. That was bullish. Next, chart 87, SILJ. This is also done well. Again, if you don't want to mess with the individual stocks, GDX, GDXJ, SILJ. Next, look at a few individuals. Here's FSM, one of the long ideas we had back in November. Look at this move. Next, chart 89, NG, also a super move out of this pattern. Next, chart 90, AU, was also a great move out of here. Now there is a little divergence at the moment, but hell of a move out of this pattern from November. Next, chart 91, FNV, another one. Double bottom back here, or W bottom I call, and it's had a nice move since. Finally, chart 92, Newmont. This one's been lagging a bit, but it broke over this base trend line in November, bounced around, held that trend line, and has now started to rally up. All right, guys, the final part of the newsletter. Let's look at some individual just stocks. So here's Apple, Crapple. The stuff going on in China, stuff like that, you got to keep an eye on it. Overall, you got a downtrend line here to monitor should the market rally. Remember, this is such a huge weighting for the market. So what Apple does, the general market does. Next, chart 94, Tesla. I told Elon a couple weeks ago that there was a nice bullish falling wedge with a MACD divergence in place. And he ignored me, but that's been playing out. Here I added a symmetry target. If we can exceed symmetry, that would be even more bullish for Tesla. As you know, Elon has his work cut out for him with so many projects. Next, chart 95, VYM was a long idea of mine last Monday, guys. You really should try to do some of my trade ideas. This was put out last Monday as an ABC. The trigger was Tuesday, right here. Look at these moves the rest of the week. Hell of a percentage move. You could have paid for your membership for, years over with that. Next, chart 96, LVOX, another one that I put out on Monday. Off this doji, it triggered on Tuesday right here. So as long as you gave it a logical stop, you should still be in it. You had a heck of a percentage move. Next, chart 97.9 was one that we put out as a long back here in early October. Had basically a parabolic move. I said it didn't look like a short. It sold off. Then I pointed out the coil the previous week. It broke out of that, and I said it looked like a short off of this doji. Next, chart 98. Here's the weekly. Don't get me wrong, guys. I think long term this thing looks great. I think it could work up to these levels up here, but I'm hoping it has a little more consolidation first. Was a hell of a buy down here on this. Whenever you have a stock coming out of a multi-year base, that is super bullish. Next, chart 99, the CTLT was a long idea of mine early last week. It was a CCI bungee play back here in early November, played out. And it was another play here off this high volume candle, gave a nice trade. Next, chart 100, Crocs, another one of these that were coming out of a long-term base. This was a swing trade idea of mine back in early November. Went long in here with a stop here. You got a higher low here, so move the stop up here and to here. You can also see how your moving average ribbon was squeezing there. Next, Chart 101, Baidu. The Chinese stocks have been doing well here, as you can see. Next. Chart 102, Baba, same deal, Chinese stock. Next. Chart 103, BTU, was a long idea that busted out of this pennant a couple weeks ago of ours. Stalled near this resistance, not surprising, but it could be forming a big cup and handle here. I'm still long some of this. Next. Chart 104, AMD. I redrew the pattern here. So I'm going to, something to watch here, see if it can hold this or not. And we'll see what happens, guys. Again, quick check on futures. ES futures are now down about 7.5 points. So again, we'll see how they fare in the morning. Have a wonderful rest of your Sunday and take care.